Good afternoon, and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of the hosts for today's webinar. We've been conducting these for the past 3 months. We greatly appreciate being with you. We always learn a lot. So let me first get into a couple of housekeeping items before we get underway. You've got a toolbar at the bottom, which is 3 key things that it can do for you. 1, you can access the materials for today's event. We have a lot of materials besides just the PowerPoint. You can ask questions, and you also can get your CPE at the end. And if you don't get the CPA at the end of this event, you will receive an email later with directions on how to get the certificate. And also, it's a modern platform. You can resize the windows, so take advantage of those capabilities. So with me today are Mark Koziel, who you all know well, and he's been with us for the past 12 weeks. He leads the firm services area for the AICPA. We also have a practitioner, Richard Levichin, who's a true leader in the profession. He's with Gallerose and Robinson. He's been on AICPA Council, lots of other leadership positions, and we look forward to his perspective related to all of the business relief activities. And we have Lisa Simpson, and her team's been working tirelessly on all the resources that are available related to the PPP program, and she's going to be reviewing the latest IFRs. And once again, I'm Eric Auskerson, the President and CEO of CPA.com, AICPA's business and technology subsidiary. So we've got a full agenda. We're going to cover that 35-page IFR on the forgiveness applications, which came out at 10 p.m. on Monday night. We're also going to give you the latest information from policymakers and regulators. We'll have that practitioner discussion, and we will be taking questions throughout the event. But before you start submitting questions, I think you already have started submitting some, we just encourage you to look at the FAQ document, which is in the materials area. It has the most commonly asked questions, so take a look at that, see if your question is already answered. We also have the Flexibility Act summary in there, and we're highlighting here the last 2 weeks, the town hall topics for the last 2 weeks. We went into detail about the latest forgiveness application and easy forgiveness application last week, so you can watch that on AICPA TV. And earlier this month, we talked about the EIDL and Main Street lending programs in greater depth. And we also talked a little bit about the borrowing accounting for a forgivable PPP loan. So let's just now get into some high-level updates related to where things stand. Here's a new slide related to, what's happened over the past 100 days and where we're going. We have been talking about the 3 distinct phases that we've been in. Now we're taking a broader look at things. The phases we've been discussing with you are, the first phase was business shutdown and what the firms did related to that phase. We've been in this business relief phase in the forgiveness portion in particular for the past 30 days. A lot of discussions going on related to the reopening. But one thing that is so clear as we look back at these past 100 days is 10 years of relationships have been built. We talked about that last week with Dixie McCurley. It's been a defining moment for firms. Many firms have built new client relationships, and they have really just established their existing relationships in ways that you cannot imagine. So Mark Koziel, I just want you to comment on your perspective here related to what's happened.
Thanks, Eric. And that has been a lot of what we've seen, and we'll get into it a little later, too, with our guest, Richard Levichin from New York City as well, and his perspective. But it has been. We've seen this, and a lot of firms have been telling us that their relationship with their clients has gotten so far deeper, at least the ones who are survived. The clients appreciate it. The clients are asking for more help than ever before. That is now the first phone call they make. So the question will be, how do we leverage that for the future? And then also the banking relationships. We found those banks that we have strong relationships with and those that we need to work on. So I hope that all of us will have time to reflect when this is all over someday to be able to look at those relationships in both areas and really kind of move them forward.
Thanks, Mark. And now that we look out, at the next 100, 200 days, we think this defining moment is going to continue. There's going to be changing business models. We're also seeing a lot of business creation. There's going to be a lot of entrepreneurialism, a lot of businesses looking to solve new problems, needing the firms to help them with budgeting and forecasting and planning. And we've been talking a lot about some of the key skills over the past couple of weeks. We noted three key skills here that were recently highlighted by McKinsey: anticipation, agility, and adaptation for clients to build success. So today's information and all the information that we've been providing to you over the past 12 weeks has been based on our discussions with these key stakeholders, governmental officials, our discussions with the firms, and also the activities we've had with the AICPA-led coalition, which includes many payroll processors. We've also been expanding those discussions with the lending community. So I was on a call today with a number of payroll providers and a number of lenders, and we're all working together to try to build a common approach, try to drive simplification, and to work with you, to work with the 44,000 firms as you're working with your clients. So what's going on right now with Treasury? Just a couple of things that we've highlighted here. Over the past 2 weeks, we've talked to them about simplification. We encouraged some of the new elements that came out in the recent forgiveness forms. We think the easy form is a good step, and we're also continuing discussions with them on where we think additional clarification is needed, and Lisa will be talking about that. In regards to the AICPA-led coalition, we're working on a common approach related to payroll compliance forgiveness reports, and also we're going to be putting together a document set of recommendations that we'll be providing to the lending community and others to help with the forgiveness process to drive a common approach. And we'll be talking more about that later on in today's presentation. So here's the latest SBA PPP numbers. This was as of June 20th. What you're seeing here is there are more business loans coming in. It's now at 4.66 million, but it has continued to not be as significant as it was in the first month or so of the program, clearly. But what we are seeing right now in these final days is an uptick. You're not seeing that reflected here. And one thing that we should all know is there's a lot of funding still available. The Flexibility Act clearly made forgiveness easier, and we do know some firms are working with their clients on getting final loans in, and we're going to talk about what lenders are still open. Mark, I don't know if there's anything that you would like to add to what we're seeing here.
Yeah, just to highlight, and this has really come to light in the last week or so, that the SBA Administrator, Jovita Carranza, mentioned the focus on community development financial institutions, CDFIs, and minority depository institutions, and really trying to help those groups that serve typically underrepresented minority communities and underrepresented communities in general in the marketplace. So this has been a nice push to get some of our minority-owned businesses to be able to apply and really focus on that. There's a lender match that was created to help companies find those organizations that are still lending today.
Thanks, Mark. So we're going to touch on the media focus, and then we're going to go into our policymaker update. The two big stories over the past week have been related to PPP2, or some people call it PPP4, and where that stands is basically there's a lot of support for some type of phase 2 in PPP, but there's going to be a lot more restrictions related to that. Rubio, Senator Johnson, a lot of alignment, even with Treasury, that if there is a next phase, that there will be more criteria on who qualifies. The other big story was related to transparency. Last week we talked about how Secretary Mnuchin said that this information was going to be kept confidential. We let you know that that could change, and it did change. And Mark Koziel will cover that in a minute, where the Treasury came out with a statement that stated that if you have a PPP loan greater than $150,000, the name of the entity and the range of your loan will be made public. And with that said, there's still ongoing discussions related to how the PPP loans below $150,000 will be treated. There's a lot of questions in the House leadership related to basically this agreement between Treasury and the Senate. Phase 4 business relief activities, there's discussion around those, but there's a lot of feeling that there's still a lot of money left in the CARES program, so nothing is really going to happen there till late July and August. And then there's some other issues that are developing. Some states have stated that they may pull back on state-funded grants to not-for-profit PPP recipients. So we're just watching all of this. And there's a couple of big tax items that we're watching. And we got a special guest here who was not on the opening slide, and that's Ed Carl, who leads the tax area for the AICPA down in Washington, D.C. And Ed, why don't you give us the latest related to the July 15th tax filing deadline, and also talk about the latest related to the PPP forgiveness amount being tax deductible. So welcome, Ed.
Thanks very much, Eric. And, Mark made a comment a few minutes ago. He said something to the effect that we will reflect when this is all over someday. And I've gotten a lot of calls from members this week, and I think many of them were saying something similar about the end of filing season. We just took a position indicating that July 15 should hold. We don't want to see IRS or Treasury postpone that filing date any further. And I just want to sort of give just a minute overview of why we took that position. We've been following things on a day-to-day basis since, frankly, last April 15th. And one of the main reasons that we're saying this is because of the state conformity issue. Back in April, when they did the first postponement, roughly 41 or 42 states conformed to what IRS did. Not exactly, frankly, all of them. Some of them postponed, but not to the exact date. Some of them didn't postpone estimated tax. We're hearing that that level of conformity won't be close to what it was in April. We're hearing a lot of concerns from the states about budget issues, about revenue, so we don't think that the conformity level would be close, and that would lead to a state of confusion that would be quite immense. We also spoke directly with our members through a survey a couple of weeks ago, and we had a fourfold response rate to our normal surveying. And not only did we get a fourfold response rate, but we had 1,000 comments put into the survey. I read every one of them from our membership. As you can imagine, with a very diverse membership, we got a diverse response. So we asked two questions. Question one was, can you handle July 15th, basically, either filing returns or extensions? And the majority said, yeah. But when we asked whether IRS should extend, a lot of people said they did. But when we dived into the comments that people put in, a reason that they wanted IRS to extend was because of the financial condition of their clients, their wherewithal to pay. There was a lot of concern about that. The bottom line is we've come up with a position about holding to July 15th. Importantly, we've also reached out to policymakers about what they're looking at. What we've been assured is that they will make an answer by the end of June, so within the next couple of days, so that everyone can make plans. There are lots of concerns both ways, one way or the other, and so The call will be made by Secretary Mnuchin, and we hope to see that answer in the next couple of days. So we do know our members, a lot of members have concerns, and we know a lot of members are all over the place on this, and we're trying to listen to every one of those concerns and different permutations. The one thing I will say I don't expect to see is a bifurcation of the payment and the return filing. There's a strong sense, again, nothing is 100%, but there's a strong sense that either July 15th will be postponed for filing and payment, or it won't be. I don't think they'll break up.
And even here, the questions coming in, and Mark's going to give some closing comments, where there's some people that are supportive of the July 15th date, and there's a number that want it extended. So this is just something we'll continue to watch. What's the latest related to PPP forgiveness being deductible?
So the expenses related to the forgiveness of the loan, the deductibility of that, there are a lot of comments from members I've received talking about concerns of double dipping, and that's what IRS said in a notice that they released April 30th, that those expenses would not be deductible to the extent that you got forgiveness of the loan. But we know very clearly and directly from Congress that the intent was both, number one, the loan forgiveness would not be taxable income, and the expenses would be deductible. From a tax policy perspective, you can say, well, that's double dipping. But this is not a usual situation. The focus of this legislation was to give business a helping hand and to try to rescue the economy. That was the focus. The focus wasn't on the tax policy, and it's clear what Congress wanted. Eric, there is a bill pending. It was introduced by Senator Cornyn of Texas. There is strong bipartisan support. To the extent that we get phase 4 legislation, or if you want to call it CARES 2.0, and there is a possibility of that, a strong possibility, we're looking towards maybe the end of July, the first week of August for possible legislation. If that legislation moves, there is a good likelihood that the legislation dealing with the allowance of the deductibility of the expense will be in there, strong possibility. So look towards the first week of August.
Yeah, thank you, Ed. We're going to keep updating this community on how both of these elements evolve. Mark Koziel, any final perspective from you before we move on?
No, I think that what came to me based on what Ed reviewed, number one, is that we did listen to membership, but this proves in, like many other instances, that we do have a diverse membership, as Ed stated. So when we put a policy position like this together, we don't do it in a vacuum. We are talking to our members, but our members are all over the board on this. And so, based on making that position is based on input from committees, tax committees, real-life practitioners who help us give that perspective. Now, from the firm standpoint, I know this will sound a little selfish, but for some firms, they're saying, you know what, enough's enough. From my cash flow perspective, I got to start billing my clients. I can't bill my clients until I get their returns out the door. My clients aren't bringing their stuff in until they know they're closer to the deadline. Everybody's deadline driven. So keeping July 15th, allowing for folks to do the extension as need be, that was the policy ultimately to, I think, appease overall the profession. And for those clients still struggling to pay, there are instances where you can ask for exceptions, but for a lot of, for the government itself, they've infused a lot of cash with PPP and EIDL and the like. And so at this point now also, and then you have the issue of the states, and the states trying to conform to the same thing, and there's no guarantee that they would conform because the states are begging for their money too. So it would have created a bigger problem trying to get past July 15th, but we'll see what happens. Eric?
Well, thanks, Mark, and thanks, Ed. And this is something via social media and our communication we'll continue to keep you updated on. So, Mark, let's just jump into some of the latest guidance.
Sure. So, the transparency program, Eric mentioned it before. here is the breakdown of what is going to be reported out. I'm not going to go into great detail on this because some of it could change too. And there's some who say in D.C. that some of the pushback from the House would be that those loans below $150,000, whatever that number comes to be. So if they say, well, we want a transparency for $50,000 and above, and that whatever that floor number is where they're going to be looking to give even bigger benefit beyond just the EZ form for just total forgiveness without substantiation. So that's some of what the pushback is from the House. So this may not be over. What we do know, and like Eric said, we said this to everybody last week. People said, Mnuchin said that they're going to keep everything private. It's not quite what he said. He said that data would remain private. And so individual payroll data that's used to go into this, that'll still be private, but here's what will still be transparent. We've said it very early on, before they even announced any level of what was going to be made public, is that this is FOIA-based, it's Freedom of Information Act, that at a minimum, every business should expect that their name's going to be out there in their loan amount at a minimum. And then beyond that, who knows where it's going to be, and as administrations change, who knows where it'll go from there. Next slide, Eric. So tool for small businesses to connect to CDFIs. I've already talked about this. This is the lender match. Great information. Go to SBA.gov. I'm not going to spend any more time on this. We can move on. And now additional guidance. So the additional FAQs, IFRs. At this point, I want to turn it over to our incredible expert, Lisa Simpson. She never thought that she was going to be known for SBA programs, but her and her team, again, have just done a phenomenal job, and I see questions coming in. Lisa will answer everything possible, but we do know there are more FAQs coming. We know that the banks still aren't even ready for forgiveness applications in a lot of instances, so Lisa will keep you up to date. Lisa, we'll turn it over to you.
Thank you, Mark, and I do pay him to say those nice things about me, just in case you were wondering. So the first one is an interim final rule on eligibility. And this one, we talked about a different version of this that came out the previous week. This, again, is relaxing eligibility for those who might have a criminal background. So the first amendment that was enacted on June 2nd reduced the time frame to 1 year. This new one provides even more flexibility. So it limits the ability to, or limits restrictions on participating to those with pending felony criminal charges instead of subject to an indictment. And it also loosens the restrictions on those who are serving parole sentences right now. And then on the next slide, we had the big interim final rule that came out on the 22nd, and it basically deals with the loan forgiveness process and the application that was released on the 15th. So this IFR is basically incorporating all of the loan application or the loan forgiveness applications into an IFR. So mainly updating what we already knew, but there was a big amount of discussion on last week's town hall about, can a borrower apply for forgiveness prior to the end of the covered period? And the answer to that is yes, according to this IFR. And it gives you an example of how to do that. If a borrower has a salary and hourly wage reduction, but they still want to go ahead and apply before the end of their covered period, they can calculate any reduction and then apply it to the rest of the covered period. If you go into the IFR, it'll give you a great example there. What's also interesting in this IFR is it gives you an example of how to use that FTE reduction exemption if your business has been impacted by those operating restrictions around COVID-19. So if your business was forced to close its doors and that impacted your ability to keep your FTE headcount where it needed to be, then this will give you some relief on that particular safe harbor. It also spends quite a bit of time talking about lender responsibilities for reviewing the information. Just as a side note, this is a 34-page IFR. If you're interested in, it's always great to read the IFRs. They're fascinating reading. But if you're interested in the FTE reduction exemption, you'll see that on page 19, and just some good examples there for you.
Lisa,
we mentioned last week that it appears.
You boil it down, the 34-page IFR, into 2 or 3 slides. So,
yeah, absolutely. We talked last week about that operating restriction reduction exemption and said that it appeared that the intent of the Treasury was to apply that pretty liberally. And I think if you read the example in the IFR, you'll get that sense as well. All right, next slide, please.
Yeah, right now, Lisa, we have the new slide up with the table here.
Thank you.
In sound, so that's up live.
So another point of clarification or reiteration, I think is the better word, is the payroll caps on loan forgiveness based on the covered period. So a lot of conversation in the last few weeks about how it works for owner employees and self-employed individuals. And for owner employees and self-employed, 8 weeks is capped at $15,385. If you're choosing the 24-week, it's $20,833. You'll see your non-owner numbers as well, but I want to call your attention to the table on the right side of the slide, because there's been some confusion around health insurance and retirement costs for S-Corp owners and C-Corp owners. So you'll see that for S-Corp owners, health insurance is not includable as an eligible payroll cost for forgiveness. Retirement is, but it is factored into that cap of $15,385 or $28,33, depending on the covered period. For C-Corp owners, they can include health insurance as an eligible cost for forgiveness, but again, the cap applies, and the same for the retirement costs. So some good additional clarification that we were looking for there. All right. Last week we spent a little bit of time talking about the EZ application and the new application, the revised application, I should say, but just wanted to remind you of some of those bullet points. The EZ loan forgiveness application is a great option if you're self-employed with no employees, or if you can check some of the other boxes that are available on the application instructions for the EZ form. So you didn't reduce wages more than 25%, or you didn't reduce your head count, or you didn't reduce your wages more than 25% and your operations were impacted by the COVID-19 guidance that we just talked about. So it is a one-pager, and you've got some certifications there that are important for the borrower to read. The revised loan forgiveness application, the Form 3508, is where the borrower is going to pick either an 8-week or a 24-week covered period simply by indicating the dates of the covered period that they're selecting. And the rest of the application is generally the same as it was before. The FTE and salary and hourly wage calculation mechanics are the same. The theory is the same. It's just you might use a 24-week versus an 8-week. As Eric mentioned, yes, exactly. As Eric mentioned, we're waiting on those FAQs. Optimistic that we will see those soon. One of the biggest ones that we continue to get is who is an owner employee, and as soon as we know that answer, we will let everyone know on social media. Also, what's included in utilities, we continue to get asked for a clear definition of transportation and some of those other costs. So we hope that the FAQs will give us a little bit of clarity there. It was interesting, unless I just missed it, I didn't see anything in the IFR that discussed how to apply an FTE reduction if you wanted to apply before the end of the covered period. So we'll see if that gets clarified in our FAQs as well. And again, just to point out, There are a lot of other questions that all of you have. We understand that, and we're accumulating those, but these are some of the more burning ones.
So now on to the loan forgiveness calculator here, Lisa.
Thanks, Eric. So the big news for the week is not only did we get a new IFR, but we got a revised AICPA loan forgiveness calculator. The new version that is live on the site as of yesterday will allow borrowers to input whether or not they are selecting an 8-week or a 24-week covered period, and it will adjust the calculations around payroll and non-payroll costs and do all of the other calculations for you. So it is live and ready to go. We have also released the simplified version of the calculator for a self-employed borrower who has no employees, or an owner-employee, owner-employee borrower with no additional employees. So you've got that as well. My tips there are always to keep the application and the instructions handy, and make sure you start with the instructions tab in that worksheet. It is it's going to take you through all the calculations, but start with the instructions to make sure you get all the tips that you'll need.
Well, thanks, Lisa. I mean, that's just a great overview there of all that recent guidance from Treasury, and congrats to you and your team to getting that forgiveness calculator updated, which also is reviewed by firms and members of our coalition. So it's a team effort. So talking about the June 30th deadline, we know there's still a number of applications that are coming in, and firms are actively supporting their clients with them. It looks like most of the national banks have stopped accepting applications, but the fintech is a viable option. And even some of the fintech lenders are beginning to bring that to a close. Right here on this slide, we had noted Square, but we just were informed that Square is not taking new applications. Biz2Credit is. You need to go to each one of these sites and just confirm for yourself. We just were informed about another company called Fundbox, Fundbox, that is accepting applications. Confirm that they're accepting, and then there's also a lender match capability on the SBA site, and that's a hot link. We've been stating that it's good to understand all the forgiveness guidelines in these new applications, but no banks are processing forgiveness applications yet. Our understanding is the soonest banks will start processing them will be mid-July. There may be some national banks that even don't start processing the forgiveness applications, the 3058 forms, until August. And what we also know is that there's going to be tools coming out. And we're actually working on the next phase of the AICPA forgiveness calculator, and we are working on a potential capability of integrating it into a tool that would allow the 3058 forgiveness application or 3058 easy application to be filled out, leverage the calculator, and also have some document upload capabilities. So more about that in upcoming town halls. But as Mark Kozel has said many times, this is not what you should be doing right now. The forgiveness application process, continue to focus on getting final applications in, because there's $130 billion left, and also just the other business advice that you're providing to your clients. So, Mark, this is a great segue just to have an active discussion with Richard on how his firm is supporting their clients and leading in this area.
Yeah, thanks, Eric, and welcome, Richard. And we'll get right into it. I know we're pressed for time here, but Richard, one of the things that we've admired, and Eric and I are both on your firm's mailing list, is how you've been communicating with clients and prospects. Why don't you talk a little bit about kind of your communication plan and what the firm's been up to keep clients and prospects informed throughout this process?
Well, our overall approach is number one, we want to be of service to the business community as a whole. We're in New York. We're firms located in Florida. We have an office in the Philippines, New Jersey, and New York City. So we have a very extensive outreach into the business community. So first and foremost, we want the business community to be up to speed in terms of what's going on through the whole COVID crisis right now, and react from a standpoint of getting proper financing, getting their loans forgiven, and knowing what the next great thing is going to happen. The great thing about these calls from an industry standpoint, the accountants that participate, they're up to speed. There's just not a lot of forms out there for the business. So first of all, we start first up by being a resource. Our primary way of doing this is to send out e-blasts. So what we do is that we're up to speed in terms of what's going on, pretty much, not as current as you guys are, but we feel we're pretty up there. And we have a back office marketing group whose job is to take the latest news and put it in English. A lot of times accountants, when they write stuff to their clients, we fall in love with IRS tax codes, our AICs, and our clients fall asleep. So in terms of determining what the newest thing is, once we get that information, put it in English and get it out to our database. Our database includes our clients, our prospects, various individuals or entities or centers of influence that can also send it out to their database. But primarily, it's about being of service. Secondarily, yes, it does generate business for the firm. But in talking to my marketing department, I always tell them, put the business community first, make sure that they're taken care of.
And with that, Richard, you mentioned it's actually you're outsourcing that function. Is that right?
Yeah, that's correct. Our back office, the way our marketing department works is we're a 50-person firm, so we don't necessarily have the resources to have a full-blown marketing department. So we do have a resource in India that serves as our back office in terms of getting all that data together, managing our website, managing our LinkedIn communications, our Facebook communications, putting everything in order and sending it back to me for final sign-off so that we can distribute it to our mailing list and databases.
That's great. That's great. So as far as the PPP for your clients, who are your primary bank sources? What types of banks were you primarily dealing with in your large market in New York and New Jersey?
Well, like any firm, it's important for us to have banking relationships, putting aside the COVID-19 issues, so that if our clients need financing and they get hit with a roadblock or a hiccup, we can pick up the phone and speak to a senior level person. So all of our partners have relationships with all the major banks, the cities, J.P. Morgan Chase, TD Bank, et cetera, et cetera, et cetera. But over the years, we've created relationships with some of the small community banks, and what we found is that depending on the type of client and their relationship with their bank, it's usually best if they don't have a really good solid relationship with their bank, that maybe they should go to a smaller community bank. So in order to be a resource for your clients, it really is important to also have relationships with smaller banks. Like, for example, in New York, that could be a Flushing Bank, or it could be a small community bank like a Savoy Bank, which has got exactly one location. And being able to be a resource to referring your clients over to any one of those banks. So in terms of referring clients, we've worked with TD Bank, Citi, Chase, but we also work with Savoy Bank, which is a small local bank, and other different financial institutions, internet-type banks that we've had relationships with.
And at this point, are you getting clients or prospects asking for new applications as we're approaching this June 30th deadline?
I got a couple of client questions over the last week, but right about now, the majority of our clients they're focused on a couple of things. Number one, forgiveness, trying to figure out strategizing around forgiveness. That's number one. Number two, they're looking at EIDL, either completing that or understanding it better. And then number three, teeing up for the Main Street Loan Program. Every week we get a conversation, a query as to when is that going to be open, when are the banks going to be set up for doing that. So we're not really seeing a lot of applications right now for PPP. We do look to that for an uptick. We do expect an uptick when P4 comes out. But right now everybody's kind of focusing on forgiveness, EIDL, and the Main Street Loan Program.
And with forgiveness and the application, how are you managing that? What are you hearing from your clients right now?
Right about now, nobody's really. There was a rush as June 30th was approaching, but and a lot of our clients tend to be larger, so they kind of already have that all set up. For those clients that we work with closely, what we did was when they were first applying for PPP, we actually worked with them to set up a budget to follow so that as they were doing their spending between the time they got the loan and the June 30th period or the 8-week period, they would be able to they'd follow a budget for PPP. So for the ones we work closely with, we haven't really gotten a lot of calls from them because they've been following that budget formula. So we anticipate when P4 comes down, assuming that it has a forgiveness component to it, we'll also be proactive in terms of getting them to design a budget to follow that's going to mirror the loan proceeds.
Yeah, talk about that, because didn't you in QBO, right? Wasn't there? Talk about how you were working with your clients and QBO and what that setup looked like.
In terms of how we do the budget, is that what you're asking?
Setting
about?
up the accounts and things. Yeah, just
we actually have an article. We actually have an article coming out, an e-blast coming out, I think next Monday. So in essence, what we would do is that we actually work with them to set up the chart of accounts, where they, first of all, the loan is shown as a loan payable on the books, but then we also create subcategories within the P&L where the expenses that are to be potentially forgiven are put in a subcategory called forgiven expenses, and then you have a category called forgiven expenses. And then we have subcategories for payroll costs, utilities, business mortgage interest, and we have them when they write the checks or go through AP. We have them code to that particular area in the profit and loss statement. In a perfect world, within the payment period, when all the expenses are accounted for, it should equal the loan proceeds in a perfect world. But that's kind of how we have them set up. And so instead of having the payroll just go through post to the regular payroll account, it gets put in a subcategory called payroll costs that are under a main category called PPP loan forgivable costs.
Great. I believe we're going to be sharing that article with everyone next week or at some point so that they can see the link to it to make that happen. I thought that was just a really smart thing to do. We had talked about setting up separate bank accounts for folks, but having it set up right in their GL system too is really smart. So now as we look forward, Eric had that great slide about the last 100 days and what the next 100 days look like. What is some of what you're talking about to clients to get business ready, to get them ready to do business into the future?
Well, the thing that clients are concerned about are how am I going to survive? I mean, there's a lot of conversation around how to re-engineer their budgets so that they'll be able to spend their cash properly. A lot of companies that were on the fence about managing the day-to-day accounting are now looking at outsourced solutions. So recently we have a media company that had the traditional CFO, controller, accountants, full-blown accounting department of about 6 people. We actually walked them through a process whereby they were able to combine the controller and the CFO into one full-time person, and then we brought in an outsourced solution to be their entire accounting department. So what we're seeing is that clients have a greater appetite now to outsource their accounting functions because they don't want to cut, but they don't want to be in a situation where they cut into muscle and they end up compromising the integrity of the finance and the information that's coming out of finance and accounting. There's a lot of conversation around how to re-engineer my accounting department in such a way where it's more cost efficient, but at the same time still is efficient. So those are the kind of the key areas that we've been talking about. Aside from giving clients a better understanding as to what qualifies for forgiveness, how to spend debt proceeds, and there's been some other conversations around restructuring their company to make it more lean and mean, because now everybody wants to be lean and mean. Before it was always a concept, but now they really truly do want to be lean and mean in the finance and accounting department. The real big issue, though, is that we got a ton of clients, and I'm sure a lot of practitioners have the same situation, where they had a great 2019. They had a great first quarter 2020, and the rest of the year is just down the toilet. But unfortunately, they're looking at a situation where they're going to end up having a big tax to pay for the success of 2019, and they don't have the cash. So there's a lot of conversation around planning on how are you going to do this? How are you going to be straight with the IRS, even though you have no money to pay your 2019 taxes. So there's a lot of tax planning conversations around that also.
Got it. Yep. Awesome. Well, thank you for that, Richard. I'm going to turn it back over to Eric. I know, Eric, we have the other options. Richard mentioned a couple of them. The big update, Main Street lending, still not available to the borrower. It's available to the banks right now, not yet to the borrower. We keep an eye on that. And EIDL, as Richard mentioned, that got back opened up again last week. So EIDL is another option as well. Eric?
Yeah, thanks, Mark. And we will be continuing to talk about these many different business relief options. I mean, Richard, talked about his focus on his clients' focus on PPP4, PPP2, and where's the next phase of business relief going, and when's Main Street going to really catch on. So plenty for us to discuss in future town halls. We're now going to go to open forum here, Lisa. Lots of great questions coming in, lots of great comments. Actually, today, when Richard and Mark were speaking, I just took a quick look at social media. I see some of the slides right now being posted. Brian Streig, a CPA in Texas, posting out some of the information, which is great. So thank you for doing that. And we're trying to stay connected between these town halls, leveraging social media. So Lisa, what questions do you want us to address? I know there's a lot of questions on the July 15th element, but I think we've discussed that. It's a difficult decision, and it's just something that I think the AICPA is listening, and we're trying to also understand what's happening with the policymakers and keep that communication flowing between us and the policymakers and between us and the members. So Lisa, I'll turn it over to you to ask a couple of questions.
I'm going to ask my favorite question so far. Will the town halls continue into July? Eric, I'll let you take that one.
Yeah, absolutely. I saw one question that said, hey, there's only a couple on the kind of registration process live in July. We are absolutely going to continue to maintain these town halls. We're probably going to have a special edition next week, because we're going to state that at the end, but I'll state it now. Once these 30 FAQs drop, we're just going to schedule a special edition town hall, and if you can't make it live, all of these are available on archive. So that's what we're going to do next week. So we will have one over the next 7 days, because we're almost certain that Treasury is going to drop those FAQs either on Friday night or Monday, and then we're going to continue these throughout July and August. I mean, this is how we're communicating with you, and this is of great value to us, and we appreciate your support of it.
Thank you. We've gotten another recommendation for a fintech lender that is still accepting applications, and that is Bluevine, BLUEVINE, and some feedback from a attendee who had a client use Kabbage, Kabbage, which we've previously discussed, and they got their loan funded in about 2 or 3 days. So again, some other good peer-to-peer information sharing going on in these town halls. One of the questions that we've been getting fairly consistently in the chat is, can a borrower use between 8 weeks and 24 weeks? And the borrower will choose either 8 or 24 as their covered period. They can apply early, but it's if they've used all of the funds, but it's still going to be based on an 8-week or a 24-week calculation. So hopefully that helps with that question.
Hey,
We've
Lisa,
also gotten
look at the
several
next
questions.
One.
Yep.
We've got a lot of questions on audio. One thing on audio, just close your other screen. Sometimes it's the streaming on your side, so we're always monitoring this. You can adjust your volume, but that's one thing that you should do. If you're having some audio issues, make sure you don't have anything else open so you've got enough bandwidth to support this webinar.
I'll throw in another FinTech recommendation, DIVVY. D as in David, I, V as in Victor, V as in Victor, Y is still accepting applications. I think this was mentioned, but a lot of the FinTech organizations will be shutting down, you know, maybe on the 26th, maybe on the 27th, maybe on the 28th. So if you either still need to apply or have a client that needs to apply, you need to move pretty quickly on those. We've gotten a lot of questions about retirement costs this week, and hopefully when our FAQs drop, we'll get some guidance as to how retirement costs. So if your 2019 retirement contribution was paid in 2020 during your covered period, is that an eligible cost? So still waiting on some information around retirement costs and how that will be applied. And I will hopefully not have to add that to our open question slide for future town halls. We got a question about whether banks will be allowed to make their own forgiveness application or if they'll be required to use the SBA's form. Eric, I haven't picked up on that in any of our conversations. Have you?
I have not.
Okay. I know that in the loan application process, they could have their own application. So they may not for this one, but we're also working, as Eric mentioned, on a lot of things in the background to try to help that application for forgiveness process run smoothly and integrated between payroll providers and the lenders. So we'll see where we end up with that. Has there been any talk about a targeted PPP program for borrowers who didn't make it into this program? So maybe they could not find a bank to get the money through, or they were a micro business with fewer than 10 employees. Any updates on conversations around that?
If they could not get into the PPP program, they were not eligible for the PPP program, Lisa?
Or they couldn't find a lender to lend to them.
They've got lenders. That should be solvable. There are lenders right now. We posted those fintech lenders. If you are eligible, under 500 employees, you've been impacted, you should get that application in, and because the next phases, there's going to be greater, there'll be more criteria on who qualifies. So that should not be a reason why. Get it in, get your application in with a lender that will support you. There are lenders that will support you.
That's why for the last 3-4 weeks, Eric, we've been given fintech options. I mean, for a lot of small businesses, if they got shut out by their bank, fintech is the way to go. They're actually really good to deal with. We've had a lot of good, positive small business responses to the fintech community.
And it's actually rolling in now. Yeah, the fintech praise is rolling into the chat right now. Let me clarify one question that came through about next week. We do not have a town hall on the store for you to register for next week. Eric and Mark and I are on standby so that if the FAQs do come out, we will be hosting a town hall, and we will communicate via email and on social media so that you can sign up for that. But if the FAQs don't drop for some reason, then we will all be back here on the following Thursday, July 9th.
So Lisa, you want me to go through some? I'm going to go on to, we've got more resources that we want to highlight this week, so I could move into that section unless you've got one more question you want to ask.
I think that's good.
All right, thanks, Lisa. And these questions are very valuable. We've got a team here answering them. We do then collect all of them, and they help drive our FAQs, and they also drive our resource center. I see a number of these questions that I think we do have answers to on our resource center and potentially in that FAQ document, so leverage those. And I just was talking about, this is probably the most visited page on the AICPA website today, aicpa.org/SBA, that outlines all of the materials that have been developed around the PPP program. Lots of information there from the original loan amount application calculator to the current loan forgiveness calculator. We also have a broader coronavirus tax resource center, which you should leverage. It's got a lot of some of the information that Ed Carl was highlighting today. We've got other learning opportunities here. These are longer. Some of these are longer webcasts talking about elements such as COVID-19 audit implications, small business bankruptcy in the new subchapter 5. So take a look at these. Some of these could be of use to you. We also want to share with you a pretty significant announcement that occurred today. The AICPA, as part of the Auditing in the Future initiative, launched a new employee benefit plan tool. There's 5,000 firms in the U.S. Doing limited scope employee benefit plan audits. There's about 50,000, more than 50,000 of those done. This is a very important service. There's 50% of the firms that do employee benefit audits do less than 4. So this tool is going to help provide guidance, guardrails. It's got intelligent questionnaires, so it's going to drive efficiency. It's going to drive quality. So just something that we wanted to bring to your attention. Mark, I'll pass it to you to make a quick comment as I continue to move on.
I got a demo of the tool last week, Eric. I think it is awesome. As a former employee benefit plan auditor myself, I will tell you it is pretty intuitive, and there are just so many things that they got right inside of that app. So I'm really excited to see that launch.
And in the future town halls, the Auditing in the Future initiative is a huge initiative underway at the AICPA. Some of you may have heard the acronym DAS, Dynamic Audit Solution. It's one of the largest initiatives ever undertaken by the AICPA, where we're really trying to build some modern tools for the future auditor and transform the methodology and the process. So a lot going on there, and that's an item we will be talking about more in the future. One thing that we're all aware of is that these past 100 days have been intense, a lot of intensity, and there's a number of resources that the AICPA is putting out for small firms on how to maintain balance and wellness during this extended busy season. It's going to be a long 2020, so we just wanted to highlight some of these resources for you. And as Lisa just said, we are going to, most likely, I'll go out on a limb and say that we are going to have a special town hall series next week. It is not scheduled, but everyone who's attended one of these town halls will be sent an email. We will post it on our resource center. We will give you, 24 to 48 hours notice, and we will record it. So that's a decision that we've made. And it will be based on the FAQs coming out, but that seems very likely. So look for that webcast to occur on Tuesday or Wednesday, most likely next week, probably Wednesday. So we will be in touch on that. We also have the next town hall scheduled after that, special edition for July 9th, and we will be adding additional ones in the registration calendar. So thank you very much for your time today. I want to thank Richard Levichen for joining us. Having a practitioner, a leading practitioner, is always so helpful. And I want to thank the broader AICPA team for all the work they do in putting together these weekly town halls and all of this information. And thanks, Mark and Lisa. So hope everybody has a good weekend, and we look forward to connecting with you again soon, most likely next week on the town hall or via social media. That's all for now. Thanks.